What is a preferred return, waterfall structure, or a capital stack? A capital stack dictates who gets paid profits from a deal in what order. For instance, when you buy a rental property, you typically pay the mortgage lender first for their capital in the deal, the mortgage loan, before you get to keep any of the profits for yourself. A preferred return dictates that after the mortgage payments, limited partners get paid out all of the profits on a deal until a certain threshold is reached. For instance, a 5% preferred return on a deal means that if an investor invested $100,000, the first $5,000 of profits are required to go to the limited partner before it starts getting split with the general partnership. This guarantees that limited partners are paid first before general partners make any profit on their end. A waterfall structure may be incorporated additional levels of preferred returns and adjust the GP-LP split on certain thresholds. For instance, a waterfall structure may indicate a 20/80 GP-LP split up until the LP hits a 15% LP IRR hurdle, after which the GP-LP split adjusts to 50/50. This would mean that if an investor invested $100,000 and the total profit from the deal that first year was $20,000, the payout would look like this. First, we calculate how much an investor needs to profit before the hurdle is achieved. In this case, since there is a 15% LP IRR hurdle, they are owed $15,000 of profits before the GP-LP split adjusts. Since the $15,000 of profits would represent the 80% LP share, the GP share would be 20%, which is $37.50. The formula is $15,000 divided by 80% equals $18,750. That's the total profit to be paid out so far. GP calculation is $18,750 times 20%, which is $37.50. This means a total of $18,750 is profits to be paid out before the next level of GP-LP 50/50 split begins. So since the total to be paid out is $20,000 and we have $1,250 remaining to be paid out, that remaining $1,250 would be paid out 50/50 to the LP and GP, or $625 each. We would add these amounts to the previous payouts for the GP and the LP. $15,000 for the LP plus $625 post-hurdle split is $1,565 for the LP, and $37.50 plus $625 for the general partner would mean a total $43.75 payout for the general partnership, and when you add those together, it totals that $20,000.